Have you ever, really thought about where money is heading? Not just, tapping your card or using apps, but the actual future.
It's a big question. Yeah.
Yeah. Could we see a truly digital dollar changing everything? How we pay, how we invest, how money moves around the globe?
That idea is definitely gaining traction. We're seeing the potential for much faster, borderless transactions, maybe even a whole new financial system.
And right in the middle of that shift, that's where we find the company for today's deep dive, Circle Internet Group. You might know them as CRCL on the stock exchange.
Mm-hmm.
So today we're really going to unpack Circle. They're best known for their stablecoin, USDC, right?
Right.
We want to understand their role in this evolving crypto finance world, check out their financial health now that they're public, and look at some of their key innovations.
And we're drawing on some solid analysis here, recent reports from places like Stock Analysis, Reuters, Investopedia, and Investors. So good data to work with.
Okay, let's get down to it then. At its heart, what is Circle? What are they actually doing?
Fundamentally, Circle is a fintech company. Think of them as a platform, a network, and an infrastructure provider, all rolled into one. Their main game is blockchain and stablecoin services.
And USDC is their flagship.
Exactly. That's the USD-denominated stablecoin, USDC. It's designed to be a digital version of the US dollar, keeping a stable value, basically 1 USDC equals 1 US dollar. That's the goal.
Yeah. And how long have they been around? What's their backstory?
They actually started back in 2013,
Yeah.
based in New York City.
Yeah.
And a really big moment for them just happened. They went public through an IPO in June 2025.
Right. That's pretty recent. A big step for them, I imagine.
Huge step. Puts them under a different kind of spotlight, public markets.
So it's more than just creating USDC then. What else falls under their umbrella? What services are they offering?
Oh, yeah, it's pretty broad, actually. So besides just issuing the stable coins, they're into tokenized funds.
Tokenized funds. What's that?
Think of digital tokens that represent real-world assets, like maybe bonds or even bits of real estate. Makes them easier to trade, more programmable.
Interesting. Okay.
Then there's liquidity provisioning, basically making sure there's enough digital money flowing so trades happen smoothly. They also build payment infrastructure using blockchain.
Uh-huh.
And importantly, they offer developer tools. So businesses, especially larger enterprises, can integrate Circle's tech into their own systems. They're really trying to build out the whole stack for digital finance.
Okay, so connecting this back to you, the listener. Why should you care about a company issuing stable coins or building developer tools?
Well, it's about the underlying infrastructure.
Exactly. Circle isn't just making digital dollars. They're trying to build the actual plumbing, the networks, the blockchains that could make using stable digital money as easy as, I don't know, sending a quick email.
Right. Frictionless.
So the real point here for you is that Circle's success or failure is kind of a litmus test. It tells us how fast stable digital money might move from just being a crypto thing into the everyday financial world. That could impact everything, your next international transfer, how companies manage their money globally. It's foundational stuff.
Absolutely.
Okay, so we know what they do. Now let's talk money, because this is where it gets really interesting. Their name is big, especially in crypto, but the financials, they tell a slightly different story. Maybe not what you'd expect.
Yeah, you might think a company this central would be rolling in profits, but it's more complex.
So give us a snapshot. What do the numbers look like?
Okay, so looking at the trailing 12 months TTM, their revenue is impressive. Around $2.12 billion. Pretty substantial.
$2 billion, okay.
But their net income for that same period, it's actually a loss. About $399.2 million in the red.
Wow, okay. Big revenue, but nearly $400 million loss. And what about valuation? How's the market seeing them?
That's the other really interesting part. Their forward price-to-earnings ratio, or PE, is estimated at around 160 times.
160. That's incredibly high by traditional standards, isn't it?
Extremely high, yes. It signals very high expectations from the market.
So what are the analysts saying then, with that kind of PE and the net loss?
Well, despite all that, the consensus from Stock Analysis is actually a hold rating. They've set a 12-month price target around $166.50.
Okay, all hold. And that target implies, what, some upside still?
Yeah, based on current levels when the analysis was done, it suggests about an 11.5% potential upside.
Right. So maybe help us square this circle then. You've got massive revenue, yes, but also a big net loss, a sky-high valuation. Yet analysts say hold and see some potential upside. How does that all fit together? It feels a bit contradictory.
It really does if you're looking through a traditional lens.
Yeah.
But it perfectly highlights how people invest in these high-growth, sort of future-focused tech sectors, especially something like crypto infrastructure.
Okay.
What you're seeing is investors placing a bet. They're betting on future growth, future potential, not on the profit Circle is making today. That 160x PE, it's basically the market saying, we expect massive things from you down the line.
So they're buying into the long-term vision.
Exactly. They believe Circle can scale dramatically, keep innovating, and eventually turn those billions in revenue into serious, sustainable profits. Analysts aren't just looking at the current bottom line. They see the essential infrastructure Circle is building.
Like the picks and shovels for the digital gold rush.
Precisely that analogy. They're providing fundamental tools for this new financial era. So the investment now, even leading to losses, is seen as necessary for that huge future payoff. That's what underpins the valuation and the hold rating. It's a future bet.
That makes more sense. Investing in the potential, not just the present.
Okay, but it's not just about future hopes, right? They've actually showed some real positive signs recently, especially since going public.
Oh, absolutely. They haven't just been sitting back. Their Q2 2025 earnings report, which is their first as a public company, was actually quite strong.
How strong?
Well, revenue jumped 53% compared to the same quarter last year, came in at $658 million. That actually beat what analysts were expecting.
53% growth. Wow. Yeah. And their adjusted EBITDA, that's earnings before interest, taxes, depreciation, and amortization, also climbed nicely, up 52% to $126 million.
Okay, that sounds positive.
But here's maybe the most crucial metric. The amount of their USDC stablecoin in circulation. It absolutely soared, up 90% year over year, reaching $61.3 billion.
90% growth in USDC.
90%. And it didn't stop there. By early August, it had climbed even further, hitting $65.2 billion. That's huge adoption.
Okay, but didn't they still report a net loss for that quarter? I thought I saw that.
They did. A net loss of $482 million for Q2. But, this is key, the reports indicate that was primarily driven by expenses related to the IPO itself.
Ah, so one-time costs.
Largely, yes. Things that aren't expected to recur. So investors looked past that headline loss and were more impressed by the strong underlying growth in revenue, EBITDA, and especially that USDC circulation jump. That forward momentum was undeniable.
Got it. So strong core business growth, even with the IPO costs. Now, what's actually fueling that growth? Are they just riding the crypto wave, or are there specific new things, new products or initiatives pushing them forward? Like I heard about something called ARC.
Yes, good question. It's definitely not just passive growth. They've been very active with new launches. Two really significant ones stand out recently.
Okay.
First, they launched the Circle Payments Network. The idea here is to make global payments faster, way more efficient, and much cheaper, streamlining things for businesses, developers, everyone really.
A dedicated payments network. Makes sense. And the second thing, you mentioned ARC.
Right, ARC. This is a bigger deal, potentially. ARC is their own Layer 1 blockchain.
Your own blockchain.
Yes, built from the ground up, specifically optimized for stablecoin payments. But the clever part is it's designed for EVM compatibility.
EVM, Ethereum Virtual Machine.
Exactly. That means it can easily interact with the huge ecosystem of existing Ethereum-based applications and smart contracts. It makes it much easier for developers and companies already working in that space to use ARC.
So it's specialized but also compatible? That sounds strategic.
Very strategic. These aren't just small tweaks. They're foundational plays aimed at building out the next layer of financial infrastructure.
And again, let's bring this back to you, the listener. It's easy for terms like Layer 1 blockchain or EVM compatibility to sound abstract, but how might these things actually change your financial life down the road?
Think about practical frustrations.
Like sending money overseas, it could be slow, expensive, right? Fees, delays.
Exactly. Imagine if Circle's payment network makes that process as fast and cheap as sending a quick message. No waiting days, minimal fees. That's a real difference.
Okay, yeah.
Or think about finance apps you might use. If they can seamlessly integrate stable digital money using something like ARC. Maybe you get instant loans, or easier ways to earn yield, or even just tiny micropayments for online content without hassle.
So these innovations, the payments network, ARC, they're aiming to make digital money smoother, faster, more integrated into everything.
That's the goal. Easier international transactions, new possibilities for decentralized apps, all built on stable digital money. It could lead to a more efficient, connected global financial system for everybody.
Okay, so pulling all these threads together now, it really sounds like Circle isn't just trying to be a player in crypto finance. They're aiming much higher, trying to embed themselves right at the very core of this whole evolving infrastructure.
That's precisely the picture the sources paint. They are strategically positioning themselves as a central pillar, especially around stablecoins. It's not just about having a digital dollar. It's about building all the rows, the networks, the tools needed for that digital dollar to be used easily everywhere.
And the growth numbers back that ambition up.
Absolutely.
Yeah.
That near 100% surge in USDC usage year over year, that's a massive validation signal. Combine that with launching things like the payments network and the ARC blockchain. It shows they're pushing hard to scale. They want enterprises using their tools. They want developers building on their platforms.
Getting deeply embedded.
Exactly. And that, again, ties back to the financials. Why accept those high valuations and current losses? Because investors are betting on this strategy. They're banking on Circle, succeeding in becoming that core infrastructure, achieving immense future growth, and dominating this vital slice of the digital economy.
It's a long-term infrastructure play.
It really is. An investment in how money itself might work in the future.
So drilling down one last time for you listening, what's the ultimate significance of Circle's journey? Beyond just their own stock price or company success, what's the ripple effect?
It means their path, whether they absolutely crush it or hit major roadblocks, is going to tell us a lot about how quickly digital currencies and blockchain tech go mainstream.
Like a bellwether.
Exactly. Their success or failure will directly influence how fast and how smoothly stable digital money becomes just a normal part of everyday finance for everyone. It impacts how you might send money internationally, how businesses trade, how financial services evolve globally. They're right at the forefront of that shift.
And there you have it. We've taken a deep dive into Circle Internet Group, what they are, their kind of intriguing financial situation with high growth and losses, and their key innovations like ARC. They really are sitting right at that crossroads between old finance and the new decentralized world.
Which leaves us with a really interesting question to ponder, doesn't it?
Yeah.
What would the world actually look like if stablecoins like Circle's USDC became totally normal, just seamlessly part of every transaction we make?
Yeah.
And what role would a company like Circle play then? Could they fundamentally reshape banking or even challenge how we think about national currencies themselves?
That's a huge thought to end on. Definitely something for you to mull over. Keep exploring this space. The future of money is changing fast.